All right, good day, guys. This is GoFXO, and I want to share you a trade I took from Monday, and now today is Wednesday, and I want to show you how and why I took the trade. So this is CADJPY, that's calendar dollar against the Japanese yen, and I was monitoring this structure right from last week Friday, seeing fully well that the market has done a good move, and this is what is happening in the market currently. So this is where it was. This is where it was. It came down. So look at it. It back to the supply zone. Then also play out some market structure game here. Then went down. So at around this period, okay, the market was here on Friday. So exactly here on Friday. So I had to begin to plan to take the next trade on the pair. So what did I do? I did choose the supply zone over this side, then mark it out, expecting the price to react at that zone. So why did I choose that as my supply, that I feel that the price should reverse at that zone? Because number one, structuring has been broken here. Structure was broken here at this side, telling us that okay, the trend was previously on uptrend, giving higher lows, higher highs, higher lows, higher highs, and higher lows. You can see it. The market has given higher highs, higher lows. Then the market failed to create a new higher high at this zone. It failed to give a new higher high at this zone. It failed to give. So this is a shift in market structure, because don't forget why in the higher time frame, a shift in market structure, because market failed to give us a new higher high. So now market created this to give us the higher high, then did not break the low, but it shifted in market structure. Now what next happened is that it created this consolidation, that this came here to mitigate this side, this supply zone, then went down and break this structure. It came down to break this structure, creating a real lower low. It broke this structure to create a real lower low. So we can call this in the higher time frame the check. Are you seeing it? Just change in character. There's now a change in character. This is change. This is SMS. All right. So this one is a break of structure down. So now I expected the price to react at this zone. Seeing fully well that this zone was reacted to a consolidation that exactly broke the higher low at this zone. So this is a full expression of market structure, price action, supply and demand, which I trade with. So let us go quickly to 30 minutes time frame. So 30 minutes time frame showed this. This was Friday. This was at Friday. This price action was at Friday. Then opening of Monday came up and it tagged into our POI. That's the point of interest. That is the point of interest. So immediately I'm going to show you the trade I took. I also sent it to my Signal group, and some of my traders took it also when I called the trade. So now looking at this, it reacted successfully to the zone, then begin to drop down. So as at Tuesday, I also saw this zone again, a repetition of what happened, what I explained in 4-hour time frame also happened in this zone. This is a consolidation, then market react excellently to this zone. Now you're going to pick this side because this is what we have to pick. So it reacted successfully to this zone. Immediately it reacted to this zone, it gave us an entry. Let us go to 15 minutes time frame now. So it tapped into the zone. After tapping into the zone, look at a break in structure. a breaking structure, then you can now see an execution, a direct execution as at this point, giving us a good risk to reward again in this place short. All right. So where do we supposed to target? My fixed target for every trade is always 1:5, but I can also extend it, seeing fully well that if the trade is going successfully in my direction. So 1:5 is about this zone, and price ought to get to this place. All right, so or you can go for full TP, that's the full take profit at the real low, at the week low in this place, expecting price to get to this zone. So that means if you're risking $1,000 on this trade, you can get this is 1:7.57, that's $7,570 from this trade. You can see an easy peasy work, executed successfully. So this is already running about 4 RR plus. That's if you risk $1,000 on this trade or $100 on this trade, you should be bagging $400 by now to $4,000 by now. So let us look at completely the trade that was executed since Monday. So we are going to look at the RR, that's the risk to reward at this zone. So look at this. So taking it downward, a full TP is 9R. That's if you are risking $1,000, it should be giving you about $9,000 plus, about $9,300 plus. If you are risking $1,000, if you are risking $100, it should be giving you $900 at full TP. But what did I do? I go for 5R. And that means if I'm risking $1,000, it's giving me $5,000. If I'm risking $100, it's giving me $500. And this is a clean trade executed successfully. A clean trade executed successfully. Just easy peasy. Know what you are doing. Get into the trade when you see your trade, and also execute your trade. So this is all for now. Do well to follow, do well to like, do well to share, and do well to go over what was shared in this video again. And blessings.